all the indices in negative territory. UK stocks not doing well. Asia stocks terrible. China closed flat after they dumped $20 billion in the market, not in the economy, not central banks doing quantitative easing. This is a communist regime, remember? So they said, oh, my word. The dictators in China said, oh, my word, what is going on? We can't allow this again. People are going to get nervous. Let's just take $20 billion and buy some stocks. They dumped $20 billion into the markets. The market finished flat. Can you only imagine what would have happened had $20 billion had not flowed in, had not poured in, I should say, into the market, what would have happened? So when we look at that, we can't look at it was only flat. No. You have to take into consideration $20 billion went in. What would it have looked like had that not happened? It would have been down dramatically. Everybody is beginning to say, again, I know, I apologize. It sounds self-serving. I guess it is to this point that I want you to always pay attention and continue to listen to the program. And you'll be telling your friends to listen to the program or watch the program. God, and only by the grace of God, has allowed this ministry to make some incredibly accurate calls about the economy over the last few years. One of the things that I have been saying, and I ramped up my saying this back in May of last year, was that there was no way on God's green earth is China at 6%, 7% growth rate. Then Goldman Sachs came out and downgraded their growth forecast for China and said, well, it looks like they're going to be at about 4%. I said there's no way they're at 4%. They're lucky if they're at 2%. Everybody seems to be talking about the best China is at 2%. Amazing. You only have to look at what they're doing and stop listening to what they're saying. It's a communist regime. There's no checks and balances. There's no accountability. There's no independent agencies that are crunching the numbers that we can look at. You've got the import-export. That's fairly accurate, and you can look at that, which is what I've been doing. And you can look at what they're doing with monetary policy. Now, back in July, when they devalued their currency 2 weeks before the IMF was going to make a decision whether they were going to allow them into their basket of reserved currencies, I said, look, there is no way China would have done that just before they're ready to make a decision on them entering into the IMF's basket of reserve currencies unless they were in big trouble. So I said, there's no way they're having any kind of growth in this market, or they would have never done that. Now, they are now part of the reserve currency. They were allowed in December when it came up for reevaluation, and the IMF let them in. It's purely a political move, and was not. There is no way they should be allowed in that basket of reserve currencies. But nonetheless, they're in it now. So anyway, look, a country that is growing out of their woes is not dumping $20 billion into their stock market to try to pin it up a little bit.